Welcome to Economic Insights. This week, we're examining what 2026 could bring for global markets, starting with last week's key developments. Japan dominated headlines as Governor Ueda's comments locked in a December rate hike, pushing 10-year bond yields to their highest since the global financial crisis. This triggered a global bond sell-off, with U.S. Treasury yields jumping sharply while equity markets retreated. Bitcoin experienced volatility, but bounced back with its best day since May. European core inflation ticked up while Turkey surprised with a lower CPI, enabling a likely 150 basis point rate cut. China remains concerning. Manufacturing PMI contracted for 8 consecutive months. Services fell into contraction, and new home sales dropped 33% year on year despite stimulus efforts. India provided positive news, cutting rates 25 basis points to 5.25%, while raising its growth forecast to 7.3%. Looking to 2026, major banks argue AI becomes the dominant macro factor, creating a positive feedback loop supporting asset prices. However, risks include potential AI equity corrections, inflation resurgence from fiscal stimulus or geopolitical shocks, and the wildcard of Supreme Court challenges to tariff measures potentially weakening the dollar. The S&P 500 faces 12,014% upside targets, but post-election leveraged buying raises Q1 correction odds. Europe's story centers on German fiscal stimulus potential, while Japan carefully normalizes policy after decades of deflation. Currency forecasts show the dollar remaining broadly firm, with euro-dollar targeting 1.10 by year-end. The yen trades in a 145-155 range as rate differentials narrow. Commodities present contrasts. Oil bearish with Brent forecast around $58, while gold pushes toward $5,000 on safe haven demand and central bank buying. Copper rallies toward $12,500 on supply disruptions. In EM, China faces high growth expectations amid ongoing property stress. India maintains growth momentum, though valuations are stretched. Turkey shows genuine credibility, rebuilding with inflation declining, while Poland emerges as the top Central European duration trade. Next Wednesday's Fed meeting is crucial. A 25 basis point cut completes the risk management phase, but focus shifts to dot plot projections and 2026 guidance. Powell will emphasize data dependency while managing both inflation and growth risks. For a full version of my podcast, tune into your favorite provider. Remember, we don't provide investment advice. Consult professionals for your specific needs. Thanks for watching.